Bitcoin and crypto in general are very volatile assets still. I think until there's more institutional money coming into crypto, we're going to continue to see markets be somewhat unstable in terms of their volatility, which means
crypto markets took a big hit last week. Prices are in the red again this morning. Bitcoin has now lost more than half its value since its record high last year.
For example, look at the 200-week moving average, the 4-year moving average. The overall trend is going up and never goes down. Bitcoin going up and then crashing back to 40,000 one day. And there we are today. And I think it's an excellent question about the volatility because, I mean, Bitcoin is so volatile, it gets attacked for that attribute. But with the volatility comes the return. And I guess there cannot be return without volatility. But I've seen it personally with the stock to flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock to flow model and plan B is the man, the myth, the legend. But when it's down and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019, when I published the article, we were really very much down. Then it's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing, and investors and people in general seem to forget that it's just volatility and the overall trend. If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. So yeah, it's. I guess it's a question of perspective. There's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin. And currently, obviously, a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise. And the Fed has, spoken about tapering, about cutting back on the quantitative easing that helped any asset increase in value, if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course. Rumors in the market that a second country after El Salvador will adopt Bitcoin within 3 months. We don't know which country that is, or where those rumors. We'll talk about it. And there's a lot of countries thinking about it. And I think it's a very smart move, to be honest. If we look at El Salvador, if you declare Bitcoin as a strategic advantage, as a technology that will help your country and your citizens, and you make it legal tender like El Salvador did, then you attract a lot of Bitcoiners, technology, brains, capital, and much in the same way that America did with the Silicon Valley. If you embrace technology like Silicon Valley did, you attract all the engineers and all the capital and venture capital, and that will bring great prosperity to your country. So I think what El Salvador did was very wise. We saw it playing out last couple of months, and El Salvador is now one of the few countries in that region that has a positive growth trend in tourism, in general economic growth. It's especially countries with a currency of their own that doesn't do very well because they made policy mistakes in the past. They printed too much money. They had too ambitious government programs that had to be financed, and so countries like Venezuela, Turkey, Brazil, Mexico would be ideal candidates to make Bitcoin legal tender, like El Salvador did, and I'm sure that will bring great prosperity. There's legitimate fear for more countries doing the same as El Salvador did, and that of course diminishes the power that the IMF has and that the central banks, especially the US central bank, has over countries like that. I don't think they can stop it unless with force, and we've seen many examples in the past that, of course, the diplomatic and financial aid is the first step, and then force is the second step. So I think it's very, very interesting to see what happens and what the IMF does next, because it urged El Salvador to cut the legal tender standard for Bitcoin, but El Salvador said no. So what's the IMF's next move? They must be very afraid, because El Salvador is a very small country. It doesn't have an impact on the world economy. So why are they so aggressively and so fiercely fighting El Salvador? It's an interesting question. I don't have the answer, but sure to watch it very closely. Of course, I'm a Bitcoin maximalist. I believe in the decentralization that Bitcoin brings, and the fact that it's the biggest one out there, and that Bitcoin is a protocol. But I sure see a lot of business cases that maybe do not depend on that decentralization as much as a money use case would be, as a Bitcoin use case would be. So I certainly see it as a very broad ecosystem. I am a Bitcoin maximalist, so I think that in the end, NFTs and DeFi and all that will be built on the much more secure and decentralized Bitcoin chain. But I can see it's happening right now on Ethereum and Solana and all the other coins, and that it has network effects too. Proof of stake versus proof of work, and proof of work with Bitcoin, it is the most important thing that Bitcoin added to the already existing technologies like asymmetric encryption that we do with the public and the private keys, and the peer-to-peer network that we know from BitTorrent. So Bitcoin is basically that. And proof of work is what makes the coin secure. So you need miners, you need to spend real dollars to hash the blocks and to secure the chain. And with proof of stake, you sort of go back to the fiat world, where the one with the most coins, the one with the value invested in that chain, has the power to whatever they please. And it's so, in my view, it's a step back. Yes, it doesn't take all the mining, it doesn't take all the miners and all the power that's required with Bitcoin. So you can label it, you can marketing it as environmentally friendly, but it sets you back one step to the old system that we know, the fiat system. So the ones with the power, with all the coins, with the money, they run the show, and that's what you don't want.